You can invest in buildings like these or in infra projects like these. There are many such opportunities, but which one deserves your money? Let's find out. Hello and welcome to ET Money's YouTube channel. Today, we will talk about how you analyze a REIT and an InvIT. Now, just like mutual funds allow you to invest in equity, debt and gold, REITs and InvITs let you invest in real estate and infra projects respectively. When you invest in REITs and InvITs, you stand to profit from periodic payouts called distribution, and you also gain from the unit price appreciation of the REIT or InvIT. Now, if you don't know much about them, don't worry. We'll start with a quick introduction to these investment products, and I'll also share a link to our introductory videos on them. But before I start, a quick reminder. You are watching this video on ET Money's English channel. हमारा एक हिंदी चैनल भी है जहाँ पे आप ये सारी वीडियोस हिंदी में देख सकते हैं. And if you are or know somebody who wants to understand the basics of finance in a quick and easy way, we have a channel called 5-Minute Finance. I have mentioned the links of both these channels in the description, so do check them out. Alright, now let's begin with a quick overview of REITs and InvITs. REIT stands for Real Estate Investment Trust. As I said at the beginning of this video, it's like a mutual fund that invests in real estate, not real estate stocks, but real property. So it pools together money from investors, just like a mutual fund, and invests in real estate. Now, in most cases, this piece of real estate is commercial real estate like offices, malls, special economic zones, etc. REITs managers manage the real estate portfolio, just like a mutual fund manager manages a portfolio of equity or debt securities. The rent from these properties is passed on to investors periodically. The unit price of the REIT can also appreciate based on the business performance, just like the price of a stock. So, as a REIT investor, you stand to profit from the periodic distributions and price appreciation. Now, REITs are mandated by regulation to invest at least 80% of their corpus in completed revenue-generating projects. They must also distribute at least 90% of their net distribution cash flow or NDCF. Now, NDCF is a key term in REITs and InvITs. It is cash flows and sales proceeds minus finance cost, debt repayments, capital expenditures and reserve requirements. REITs are listed on stock exchanges. The 4 REITs available on Indian exchanges are Embassy Office Parks, Mindspace Business Parks, Brookfield India REIT and Nexus Select Trust. Now, if you'd like to know more about REITs and their taxation, you can watch our introductory video on them. I've included the link in the description. Okay, so next comes InvITs. InvIT stands for Infrastructure Investment Trust. They're like REITs only, but they invest in infrastructure projects like roads, highways, bridges, power projects, etc. Like REITs, they must invest at least 80% of their corpus in completed revenue-generating infrastructure projects. They must also distribute at least 90% of their net distributable cash flow. So, as an InvIT investor, you stand to gain from the regular distributions and the unit price appreciation of the InvIT depending upon the InvIT's business performance. The 4 publicly listed InvITs on the Indian stock exchanges are India Grid Trust, Power Grid Infrastructure Investment Trust, IRB InvIT Fund, and Bharat Highway InvIT. Among these, Bharat Highways InvIT is the latest entrant. It got listed only in March 2024. Now, apart from these InvITs, there are also a few private InvITs listed on the exchanges. But because they are held by a handful of pre-selected individuals or institutions, they are not actively traded. If you'd like to know more about the basics of InvITs along with their taxation, you can check our introductory video. I've included its link in the description. Alright, let's now move to the main part of the video, analysis of REITs and InvITs. Before I start with the analysis of REITs and InvITs, here is something important. Much of the information I present here has been taken from the annual reports. I will be using the information only for illustrative purposes. I would highly recommend that you do your own research and not base your investment decisions only on the information provided in this video. Now, a good source for research is the annual, half-yearly and quarterly reports of respective REITs and InvITs. Also, of the 8 REITs and InvITs available, we will focus on 6. Nexus Trust REIT and Bharat Highways InvIT are relatively new, so they don't have much historical data. Okay, now let's divide the analysis of REITs and InvITs across 4 major segments: portfolio, financials, distributions, and valuations. Let's begin with the first component, portfolio. Now, portfolio means the assets a particular REIT or InvIT has invested in. For instance, Embassy Office Parks REIT has 9 office parks and 4 city center office buildings in the NCR, Bengaluru, Pune and Mumbai. It also has 4 operational business hotels, 2 under construction hotels and a solar park. And if we see the portfolio of the IndiGrid InvIT, it has 35 power projects across 20 states and 1 union territory. Its transmission lines span over 8,468 circuit kilometers. Now you can get the details of portfolio of the REIT or InvIT from company reports and presentations. For instance, here's how Embassy, Mindspace and Brookfield compare in terms of size. And if we see the assets of IndiGrid, IRB and PowerGrid InvITs in rupee terms, this picture would be something like this. Now by looking at the assets of a REIT or InvIT, you should try to assess how well diversified it is, both in terms of the number of properties and the regions. Now, generally speaking, the more concentrated a portfolio appears to be, the riskier it could be. Now, looking at the portfolio can also help you compare a REIT or InvIT with another one. And if you assess the portfolio quality vis-a-vis the economic scenario, it can also help you assess the prospects of a REIT or an InvIT. For instance, of the top 10 tenants of Mindspace Business Parks, 5 are IT companies. So, a difficult time for the IT sector will likely leave a mark on Mindspace as well. Similarly, IndiGrid and PowerGrid InvITs are focused on the power sector. A policy change for the sector can likely impact them as well. So all in all, spend some time going through the annual report and get an idea of the portfolio of the REIT or InvIT you are researching. The annual reports also have outlooks and forward-looking statements that can help you assess the potential of a particular REIT and InvIT. Alright, the next area we will cover is the financials. Just like you would analyze the financials of a company, the same way you can look at a REIT or InvIT as well. After all, they are business that intend to generate returns for their unit holders. So you can take a look at the revenues, net profit, cash flows, debt, etc. The financial statements are available in the annual reports. It's also important to see the historical trend, and for that you will need to check the previous year's annual reports. The table on your screen shows the revenues and profits of Embassy, Mindspace and Brookfield REITs. In general, while the revenues have grown at a fast clip for REITs, the profits have fallen for all 3 REITs in FY23 on a year-on-year basis. This is possibly due to the fall in demand owing to hybrid work, slower hiring in the IT and ITS sector, high interest rates, etc. Alright, now let's look at the revenues and net profits of IndiGrid, IRB and PowerGrid InvITs. PowerGrid InvIT made a net loss in FY23. On digging deeper, we discovered that it was due to a goodwill write-off, which is a non-cash charge. The point is that looking at financial statements of REITs and InvITs can tell you a lot about how they are doing regardless of the management commentary and all the highlighted numbers you find in the annual reports. Now, apart from the traditional financial metrics, REITs and InvITs also have their industry-specific metrics that you should look at. For instance, in the case of REITs, there is a metric called as debt to GAV. It is a solvency metric that measures debt against gross asset value or GAV. Now, GAV is nothing but the total value of all the assets of a REIT. On your screen, you can find the debt to GAV ratios of Embassy, Mindspace and Brookfield REITs. Now, generally speaking, the lower the debt to GAV, the better it is from a solvency standpoint. In the case of InvITs, a similar measure is debt to AUM. Since infrastructure projects do entail taking on debt as well, a slightly higher debt to AUM ratio isn't necessarily bad. Yet another metric in REITs is called weighted average lease expiry. Now you can call it WALE or WALI, I honestly don't know. Now this metric tells you how long the leases of REITs are expected to last on average. Thus, it measures the risk of a REIT's property going vacant. From the annual reports, you can find more industry-specific measures that you want to compare. So this was about assessing the financials of REITs and InvITs. But no matter what the financials of REITs and investors are like, your financials can forever remain in good shape. And for that, you must have sufficient health and life insurance to counter life's negative surprises. Now on the ET Money app, you can get a 1 crore health insurance at very reasonable prices. And you can also secure the lives of your loved ones by buying a term life plan or ET Money. Alright, the next area of analysis is perhaps also the most important component, which is distribution. Okay, so why did I say that distributions are perhaps the most important component? Because Distributions are the main reason why you would want to invest in REITs and InvITs. Now, distributions are similar to what dividends are in stocks, but they are not the same. Actually, distributions are a sum of multiple components and dividends are just one of those components. For instance, the Q3 FY24 distribution payout of the Brookfield REIT had these components. Number 1, interest on shareholder loans. Number 2, repayment of shareholder loan by SPVs. Number 3, interest on FDs. There are no dividend components as such. And if you were to see the breakup of the Q3 FY24 payout of IRB InvIT, that has two components, interest and dividend. Hence, in the case of REITs and InvITs, it's better to use the term distribution than dividends. Now, one important thing here, these components of distribution payouts are taxed differently. You can know more about the taxation of distribution in the two introductory videos about REITs and InvITs that I mentioned earlier. The links are given in the description. Now, from an investment perspective, it's crucial that the REIT or InvIT in question has been distributing consistently. As an investor, you would also want to payouts to grow. Let's take a look at the distribution of Embassy, Mindspace and Brookfield REITs. Now, Embassy and Mindspace have grown their distribution over the years. Brookfield has distributed about the same amount in the last two FYs. Alright, now let's look at IndiGrid, PowerGrid and IRB InvITs as well. While IndiGrid and PowerGrid have improved their payouts, IRB's payout has fallen over the years. When distributions are seen with respect to the price of the REIT or InvIT, it's also a valuation metric called distribution yield. We will see that in the next section. Okay, so how do you know whether the REIT or InvIT you're thinking about buying is at a fair price or not? To find that out, we have to use the price to NAV ratio. This ratio can tell us if the REIT unit is at a premium or discount to its net asset value. For instance, as of September 2023, the NAV per unit of Embassy REIT was about 399, and as of March 13, 2024, the closing price of one unit of Embassy was about 382. So it's at a discount of about 4%. Now, as of September 2023, the NAV per unit of IndiGrid InvIT was about 133. With respects to its closing market price of about 131, it is at a discount of around 1.5%. So, before you buy a REIT or InvIT, do check its unit price and the NAV. If the unit price happens to be at a premium to the NAV, you're getting the REIT or InvIT expensive. You would ideally want it to be at a discount or around the NAV. As an investor in REITs or InvITs, the more the discount, the better it is for you. Now you can find the latest NAV figures in annual and half-yearly reports available on the websites of the respective REITs and InvITs. Yet another way to determine valuations is the distribution yield. Valuations can be thought to be reasonable when the distribution yield is at a premium to the median. For instance, we have charted the one-year distribution yields of the Embassy REITs. As of now, Embassy REIT looks expensive as far as this metric is concerned. Against the one-year median distribution yield of 7%, the current yield is 5.8%. So, this is some perspective on valuations, and this completes our framework of analyzing REITs and InvITs. If you found it to be slightly complicated, I fully understand. But investing in any financial instrument requires its own fair share of due diligence, which you must do as an investor. And the first step is always the hardest. To get started, just go to the website of the REIT or InvIT you are interested in and invest a couple of hours browsing it. Then download the latest company reports and go through them. And that's all I had for you today. I hope you found this video useful. And if you did, do share it with your friends and family. And I'll see you in another video soon. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.